So welcome to this video. In this video, we are going to discuss about target costing. So target costing is like very different from the costing that we have seen till now. For example, we have seen batch costing, job costing, process costing, or a job or service costing. So these are like costings which are applied to specific businesses or specific industries. But target costing is a comprehensive approach which can be like applied to any type of costing across any industry here. So it is like similar to the life cycle costing approach, where again life cycle costing can be applied by any industry and by any business. Okay, so these are like concepts to control cost or to reduce cost here. So this target costing concept was like developed in Japan, and thereafter it was like taken by Western countries, and they made it like much more famous. So let's see like what is target costing and how it works in a business. So target costing is an approach to determine a product's life cycle cost, which should be sufficient to develop specified functionality and quality while ensuring its desired profit. It involves setting a cost by subtracting a desired profit margin from a competitive market price. So we'll see an example like how this target costing works. So how does a company normally fix its price? So normal companies, okay, or conventional companies start with what is the cost they are going to produce a product, okay, the cost of product. Then they add the profit. Then they arrive at the selling price. Thereafter, they make the sale in the market, and there's going to be like competition. There's going to be competition, and competition would be like heavy, and the product might be a hit. Okay, the product might be a hit, or it could flop. So finally, there's high amount of uncertainty, like how much would be the profit, the overall profitability that the company can make. So the overall profit would always be a question mark. So to overcome this, so this is a conventional costing. This is how normally companies do. To overcome this, Japanese found out another method called as target costing. Here what they do is they try to find out what is the overall profitability that they want. Okay, so they start with this kind of a question. Okay, they start with this kind of a question. So to know this question, what they first do is they first try to find out what would be the features of the product. Okay, what are the features of the product, and what could be the selling price. Okay, what can be the selling price the customer will buy this product. So they determine what would be the selling price. After knowing the selling price, they try to find out what would be their expected profit. Okay, so if this is the selling price, what should be their expected profit. So while determining the expected profit, they know like how many units at what price. Okay, at what price how many units will sell, so that they will try to determine. So once they know that, they can easily find out, they can multiply the total number of profit they will get into the total number of units that they will sell. So they are absolutely certain about the overall profit. So from here what they will do is they will find out then what should be the target cost. Okay, then what should be the target cost. So this is up to this level. Okay, up to this level they are considering up from the customer angle and what should be the things. Okay, what should be the things. So from here on, okay, from here on what they do, they try to find out what is the estimated cost, what would be the estimated cost of producing. So this is now only they are considering if this product has to be produced, what would be the estimated cost. If there's going to be a difference, okay, if there's going to be a difference between the target cost and the estimated cost, that is called as cost gap, and they try to bridge. Okay, they try to narrow down or eliminate the cost gap. By eliminating the cost gap, okay, by eliminating the cost gap, they will produce. If cost gap cannot be eliminated, then what they do is they do not produce the product. They don't produce the product at all, because if it's like even produced, it's not going to give them much profit. So why do it? Okay, so they don't produce the product. So if you want through numbers, we'll show like this. So conventionally, if you see conventionally, it is going to be like this. I'll put through numbers, you can get an idea. So it's going to be, first they try to find out what's the cost of the product. So the production department manager and everyone would say like it's 100, and they will arrive at, we want 30% profit on this, so it would be 30 rupees. So the selling price will be 30. Then they'll produce this product, they'll go to the market and sell this at 30, but competitor would sell the same product at 110. Now our product is like higher than their product, so what would happen is it would be a flop, and overall profitability would only be a loss. Okay, this is how a conventional costing works. Let's see how target costing works. Okay, first they will determine the features of the product. So for that features, there's a particular set of customers who are willing to buy that product. So they will ask them, for this features, what is the selling price you would like to buy? Okay, so they will say that we will buy this product at 100. Okay, they will say, the customer say it, they will buy at 100. So the company says we want 30 rupees profit on this, and the target cost. Okay, if they have to sell at 700, if their expected profit is going to be 30, then their cost should be 70. Now they go to the production manager. Okay, they go to the production manager. So the production manager will now tell, to make this product, it is going to be 90 cost. So the cost gap, what the production manager told and what the target cost should be is 20. There's a difference of 20. Now from the research and development manager to the production manager to the marketing manager, everyone will sit and think how this could be reduced. Okay, whether the packaging could be reduced, or whether the components inside can be reduced. Could be like substitute one component for the other. Like that, they will think about everything. If it can be, if the cost gap is eliminated, okay, if the cost gap is eliminated, that is, the cost gap is 0. So production manager, we have to produce at 70, and the revised estimate, or the cost revised estimate has come to 70. So there's no cost gap. In that case, the product will be produced. Okay, so produce. If we have to produce at 70, but production manager and everyone sitting together, they say that the cost gap cannot be eliminated, it will be at the 90 only. So there will be a cost gap of 20, means the product will not be produced. So this is a very nice concept here, because rather than producing the product and finally entering the market and finally flopping the product, we now first consider the customer. We ask the customer, okay, like what his opinion is and what price he wants. Then we determine like what is the profitability we want, then what should be the cost, and whether what would be the actual cost of production. If it's possible to meet the target cost, we'll produce the product. If the product cost is going to be 90 itself, then it's like not worth to produce the product. Because see, if we are going to produce at 90, what would happen? The customer will buy at 100, the cost of it is 90, our profit would only be 10, not the 30. So why should we unnecessarily waste our time and effort for making a small profit? Rather than that, don't do it. So that's about the target costing concept here. So we'll start with the theory here. A target cost is the maximum amount of cost that can be incurred on a product. However, the firm can still earn the required profit margin from that product at a particular price. So the real cost of the product should never cross the target cost. Okay, if it crosses, then it will hurt the company's profitability. Target costing decomposes the target cost from product level to component level. So what target costing does is, it it starts a kind of a creative process for the managers where they are like forced to think how to reduce the cost at any level, okay, whether it's going to be a distribution level, marketing level, or production level, or even the component level, okay, or can we reduce it by changing the supplier. So we it forces the managers to think and come with a creative solution to reduce the cost. Through this decomposition, target costing spreads the competitive pressure faced by the company to products, designers, and suppliers. So it's not only the designers or the producer who has to. Usually, in a company, the production manager is like given the target of reducing the cost. So, and he's like put all the pressure to reduce the cost, but that is not the correct way of putting pressure here. The pressure has to be evenly spread among the R&D managers, production manager, distributor manager, marketing manager, or even the supplier. Okay, so it can even extend it to the retailer and wholesaler also. Even they are the part of the chain here. So don't put pressure only on the production manager here. Target costing consists of cost planning in the design phase of production as well as cost control throughout the resulting product life. So while designing itself, we have to try to find out how we could reduce the cost of the product, because sometimes if we design a product in a particular way, the cost would change. Okay, for example, if a design requires a kind of a very costly raw material, okay, and we have designed it like that, then the subsequent products cannot be changed. But at the designing stage itself, we could substitute that product with another kind of a cheaper product, then it's easier for us to at the designing stage itself we could reduce the cost, and we could reduce the cost and we could make some profit. The cardinal rule of target costing is to never exceed the target cost. So never exceed the target cost here. However, the focus of target costing is not to minimize costs, but to achieve a desired level of cost reduction determined by target costing process. So we are not like trying to reduce cost for the sake of it, but we want to have the overall profitability. So this is the steps involved in target costing. So we have already seen the illustration itself. So let's read it once. A product or service is developed which is perceived to be needed by customers and therefore will attract adequate volumes. So first, even before like developing a product, we should know whether that product will attract a particular customer segment and whether they will pay money for that and how many of them will pay for it. A target price is then set based on the customer's perceived value of the product. This will therefore be market based price. So then we ask the customer like what price they will be willing to pay. The required target operating profit per unit is then calculated. This may be based on either return on sales or return on investments. So then we try to find out the target profit. The target cost is arrived by subtracting the target profit from the target price. So the difference between the price and the target is the target cost. If there is cost gap, attempts will be made to close the gap. Techniques such as value engineering may be performed, which looks at every aspect of the value chain business functions with an objective of reducing costs while satisfying the customer needs. Okay, so we are trying to reduce the cost, but at the same time we should not like compromise on the required quality or the required functionality of the product. Okay, because the customer has said that he will buy a product, okay, with the idea of a desired quality, okay, and a desired functionality. So if we should not never at any point of time compromise those elements here. And last one is negotiation with customers may take place before deciding to go ahead with the project. So finally, when we are going to produce a project, we have to show the prototype to the customer, and if they like it, then we could go ahead with the product. So that's about the theory related to target costing. So now we'll move on to the problems. So problems are usually small, but usually this question is set in terms of what to say, in terms of theoretical only here. Okay, but we'll see the numerical problem here. A gaming company plans to launch a new game and is using target costing to plan. Cost estimates have been prepared based on the proposed product specification. Particulars, direct material, salary, quality check, sales commission, software cost, hardware cost, marketing, customer service. The target profit margin for the game is 30% of the target selling price. The maximum revenue for the product would be 66,000. Calculate the target cost of the new game and the target cost cap. So our first step, okay, is to arrive at the estimated selling price. So we'll start here. So we'll start with the target selling price. So the estimated, or okay, the target see here units are not given. Okay, so we'll take the whole price, okay, whole sale amount itself as the target value. Okay, so we can't get the target selling price, we'll get the target sales. So it's represented in 66. Okay, so the target profit has to be 30% of the selling price. So the target cost has to be 46.2. Okay, anything more than that is not good. So what we'll do is we'll try to find out the estimated cost. Okay, so the estimated cost is going to be direct material, which is 4, and salary 25, quality check, hardware cost, marketing, and customer service. Okay, so all of this put together is 50. Okay, so the estimated cost seems to be 50 here. So what is the cost gap? So the cost gap here is the difference between, okay, the difference, okay, also if you want you will just type it. The cost gap is the difference between the estimated cost Okay, this is what it takes to produce the product, but the target cost is the cost which has to be met. So let's get the answer. So the company has to reduce 3.8 or 38 3,800 of cost. Okay, they have to reduce this 3,800 cost to make the product viable. Okay, so that's about this sum. We'll move on to the next sum. So we'll start with this question. So this question indicates that briefly describe the main steps involved in deriving a target cost. Explain any difficulties. So explain any difficulties which may be encountered and any benefits which may arise when implementing target costing at SECO. So these are the two questions. I think question A, we have already discussed about what are the steps involved in target costing. So we don't need to discuss. Better what we'll do, if you require, we'll just copy that area and we'll paste it here. Right, we'll paste it here. So for the second one we have to do, so he's asking what are the benefits. Okay, what are the benefits that might come because of target costing. So our answer should not be generic about mugging up advantages of target costing and writing. That is not the concept here. The concept here is applying the benefits of target costing for this company. Okay, and we should also find out the difficulties. So it's going to be benefits of target costing for SECO, and here also it would be the difficulties of target costing for SECO. So we'll start. So the Chemical Free Clean Co. provides a range of environmentally friendly cleaning service to business customers, often providing a specific service to meet a client's need. Its customers range from large offices and factories to specialist care wards at hospitals where specialist cleaning equipments must be used and regulations adhered to. So this is actually the difficulty here. Normally, target costing approach is used for products, but here is used for products, but here we are approach is used for products, but here we are applying, we have to apply now to a service business. Okay, so that is going to be the first difficulty here. Okay, that is going to be the first difficulty here. So the second would be the different types of customers. So why is it that different types of customers is a problem? See, the problem is when we produce a product, it's a single product, so it's a standardized product. but different types of customers leads to different uh, variations in service. Okay, different types of customers lead to variation in the service given, right? It leads to variation in the service given. Therefore fixing a target cost will be difficult here. Okay, so that is going to be the second problem. So let's move on. CCO offers both regular cleaning contracts and contracts for one-off jobs. So again, this is a problem here. Okay, regular cleaning. Okay, regular cleaning means it is, okay, or else we'll put like this: for regular cleaning contracts, at least we can fix, okay, contracts, we can fix an approximate, at least an approximate target costing, right? But for one-off, okay, what is one-off? One-off means only once we are going to do that job. Okay, for one-off jobs, it is difficult to fix a target cost. So as we could fix a target for the regular cleaning contracts, at least that could be a benefit, but for one-off cost we can't do it, jobs we can't do it. So the target cost is again going to be a difficult task. So the next step is going to be, for example, its latest client was a chain of restaurants which employed them to provide an extensive clean of all their business premises after an outbreak of food poisoning. So this tells us like how difficult it is to create a target costing here. The cleaning market is very competitive, although there are only a small number of companies providing a chemical free service. Okay, so if you see, the target costing is very much needed for CCO as very much needed for CCO as the market is very competitive. The market is very competitive, so we need to have a target costing, then only we could make profit here. The cleaning market is very competitive. I think that we have read it. Okay, CCO has always used cost plus pricing to determine the prices which it charges to its customers, but recently the cost of cleaning products CCO uses has increased. Okay, see, that is actually a problem. Okay, see, if you are using, if CCO uses cost plus pricing, then any increase in cost is passed on to customer. Hence, the customer might approach our competitor. Okay, he might approach our competitor and we might lose them. Okay, so that is a huge problem. So that is why, hence, CCO should control the cost using target costing. Okay, so that's about this question, this sentence. This has meant that CCO has had to increase its prices. I think that's what we said. resulting in the loss of several regular customers to competing services. I think that also we have mentioned. The finance director at SECO has heard about target costing and is considering whether it would be useful at SECO. Okay, so even though target costing is difficult, it has to be employed here. Okay, so they have given us 7 marks. So if you see, we are getting 3 points for here and around some 4 points here. So we are getting that 7 marks of answer here. Okay, so usually target costing can be easily applied to products, and it's very difficult to apply for services. But even when it is like difficult, if you take companies like McDonald's, which is a partly product and partly service, has like, or KFC or Domino's Pizza, they have effectively used target costing, and they have standardized the service itself. Okay, so how it has to be served, in how many minutes it has to be cooked, how it has to be delivered, okay, how it has to be built, everything is like very standardized. Okay, and they're able to serve their customer much more better here. Okay, so that's about the concept here. Hope you guys have got a good idea here, and we'll move on to the next question. So we'll start from this question. So this is a lengthier question here, and what they want is calculate the cost gap per unit in each of the 3 years of the booster's life, taking into account all estimated costs. Okay, so in each year we have to tell like what is the difference between the target cost and the estimated cost. Advice on the extent to which target costing would help Pitlane to achieve the financial performance objective set by the shareholders. Okay, so how target costing would help the company to achieve its profitability, or some other measures that they have fit. So there are like two concepts here. One is a calculation, and the other one is the how do you think target costing will help the company. So whenever we read, and if we have any points, we'll just mark it. So we'll have two elements here. One is calcu or computation of target cost gap, and the other one is we'll find out how target costing will help Pitlane. Okay, Pitlane in achieving I think what was the thing, in achieving financial performance objectives. Okay, in objectives. Okay, so these are the points that we have to look for. Let's start. Okay, we'll start from here. So you could read this as I move the cursor. Okay, just read it as I move the cursor. And if there's any main point which is useful for our answer, we'll just like take it and use it. Okay, so if you could see here, the company has, so we can put it as Pitlane. So we'll take it as Pitlane and okay. Pitlane has customer or long-standing customer who buys at cost plus pricing. Okay, so for this kind of company, okay, for this kind of client, it will be great if Pitlane could could reduce or maintain the cost at the same level. Either we have to reduce it or we have to maintain at the same level. Okay, so that is our first point. Okay, so that is going to be our first point. Let's see our second point. So that's where target costing is helpful. So we can put like this: target costing will help to do this. Okay, so target costing will help the company to achieve this. So we'll copy it from here and we'll put it here. So we'll start. But if you see, the difference between the actual cost and the standard is like very negligible. It means it's a usually a cost which is maintained at the same level, but still we could reduce it. The more we reduce, the more profitability for us as well as for our customer, right? So we'll start from here. So Pitlane runs several production lines in 2 factories located in different areas. So the transportation of different components, okay, of different components between 2 factories should be reduced. Okay, the movement from here to there and from there to here should be reduced so that the cost can be reduced. The factory's layout is poorly designed and the production process requires components to be transferred among and between the factories. So again we can put like this: layout of factory has to be improved. So the company is trying to take advantage of the tax benefit or tax subsidy that the government gives, and they are developing a new product called as a booster. And this product is going to be a B2B. It's not a B2C. So it's going to be a B2B booster. it's going to be B2B booster sale. So let's start. Pitlane's marketing department. So if you see, the marketing department says that this company is operating in a country called as D-land, but a similar kind of scheme has been implemented in another country called as V-land. So they take that performance of that scheme and they are trying to put it here. So this company does not have much experience in developing new products, and they also are very bad at estimating cost and potential revenue from them. So all these are required to do target costing. So we can put it like this. This company does not have expertise there. So the company feels that over the period of 3 years there will be like good sales, but after the government removes that subsidy tax benefit, thereafter the sales will quickly fall. That means the sales will be there only for 3 years. Thereafter there will be nothing. So now he is giving some financial information. The total fixed cost during the scheme are estimated to be 10 million, including 2.8 million upfront development cost. So this is the research and development cost to communicate, and this is going to be spent on developing a app. Okay, they are going to develop an app, and they also believe that the quality of and the highest quality packaging, the packaging should be absolutely good, will allow it to charge 10% more. So because of the app and the high quality packaging, the marketing department feels they could charge 10% more than the competitors. But will it be possible? That's a question. Okay, let's see. Okay, the development team has said that. Let's tell about the marketing team. Okay, so the existing people in D-land don't even have a smartphone. So creating an app for this kind of a product would only be a waste of time. So I don't think these are like much useful for our consideration. Let's see. I think this we could use. For example, first we have to in target costing. We have to ask the final customer, okay, how much he will pay for the product, okay, for the product with the given, for the product given with the given features. Okay, for the given features, what would they pay? So first we have to ask that. So the second step would be to find the profit we want. Then we have to find out the target cost. So again, these are the steps here. So the company has not got this information properly, so they are trying to develop app and all. So the question can be, is app required by the customer. Okay, that's a question we have to ask. Will he value the package cost? Okay, that we have to ask. So unless we have answers for that question, we cannot go for a target costing. So let's see here. So they have found out the direct cost for this product, and it's given in appendix 2. Let's see the largest direct cost. So if you see here, there are like many subcomponents. These subcomponents are bought from 6 different suppliers. So why can't we buy? Okay, so can we buy in bulk from a single supplier and reduce the cost? Okay, is it like possible? Because we are trying to buy it from 6 suppliers, so that there is a high coordination cost, delivery cost, ordering cost, and that. So we can minimize. Okay, so we can minimize the ordering cost. Okay, delivery cost, admin cost can be read. Okay, we can minimize all these costs. Okay, that's another question. If we have like similar kind of a same supplier, if we have a single supplier, we can reduce all this cost. But is it like possible? That we have to check. So let's go to the next one. So see, there is some kind of a component here. Okay, what is a component here? So many subcomponents seems to be like damaged. Okay, why it is damaged is it is like so fragile that it is getting damaged at the time of fixing. So they are like paying a higher salary for the for new staff. Okay, so again, can we buy reliable quality sub component and and uh, eliminate the need for higher paid staff? Okay, is it like possible? If possible, we could do that. So Pitlane staff have never been encouraged to suggest any way to improve the manufacturing process. Okay, so employees should be encouraged to give new ideas to the company to reduce the cost. So if we do that, again we could reduce the cost. So let's see what else are there. So shareholders have said that this project should go ahead, and they want 15% on the net profit after all costs for the duration of the scheme. Okay, they want 15% of net profit. So we have to find, okay, those, so they have given the numerics here. Let's find out. So we have done the theory part. Okay, theory part we have done. For the numerical part, I think we could do it below here. Okay, we could do it here because I don't think it is possible to do on the other side. So we'll try to do it here. So we'll start. So estimated market data for booster, they have given 3 years of time. So let's see. So we'll start with particulars. Then we'll get data for 2018, 2019, 2020. Okay, so he says that the total market size is going to be like total market size. Okay, total market size in terms of units he is telling. Okay, in terms of units, it's going to be 6 lakhs, 5 lakhs and 4 lakh 60. And how much products could we sell? Okay, so booster market share. So then we can find out booster. Okay, sales units we can easily find. So first let's get the share. It's 10%, 15%, 20%. So the total size of the market is 6 lakhs into 10% is our what we could achieve. So we could achieve this kind of range of product sales for our booster. And now we'll get the price. So the average price is going to be 180. So this is the total sales of the company. Okay, this is the total sales of the company. And let's see what happens in terms of the estimated cost price. See, the estimated cost price is like this. So let's get the total sales, okay, for all the products. I think the question was about computation of cost, target cost gap, but the question wanted us to find advice on the extent to which target costing. No, sorry, this one. Calculate the cost gap per unit. Per unit is asking in each of the 3 years of the booster's life, taking into account the estimated cost. So he doesn't want the full cost how it is moving. He just wants us to find out each year what would be the estimated gap. Okay, so we don't need to find out the total sales. What we can do is we can try to find out okay, the cost. So I think we'll have the sales amount. Let's get the target profit. So this can be our target sales. Let's get the target cost. So target cost will be arrived only when we know the target profit. Okay, so target profit, he has told that it is going to be at 15%. So it was given in the last paragraph, 15%. So 15% net profit margin. So net profits are usually computed on the sale value. So whatever the sale value into 15%, if we put, we'll get the profit. Okay. Now we'll try to find out what is the target cost. Okay. See, target cost is, so cost per unit is this. Okay, is at 134. So if we multiply 134 into the units, okay, into the units, we'll get the cost per, we'll get the target cost. No, I think we won't get the target cost, we'll get the estimate cost. So wait, we have to get the target cost, right? Target cost is nothing but target sales minus target profit. So we have to produce the product within this price, right? So if you want, we'll put here TC equals to TS minus TP. Okay. So what should be our estimated profit? Okay, we'll just try to find it out. Our estimated cost will be this number. Okay, 134 into the units. In the same way, we have to find out for other numbers. So the difference between these is the cost gap. So cost gap is a very important number. So our estimated cost should be less. Okay, it should be the estimated cost and target cost should be equal, or the estimated cost should be less. Okay, it should be less. That means we have to produce at 9,18,000, but we are able to produce at this much. So it is a good thing. Okay, it's a good thing. So we should produce at 9,18,000, but we are producing at 8 lakh, something like this number. So there is no cost gap. This is a profitable. Okay, this is good. Only if it's a negative, it is a bad thing. So we have to produce the products at this cost, and the estimation has come at this. Okay, the estimation has come at this level. So there's no, we could produce the product. Okay, we can produce the product at a cheaper level than what it is given. Okay, so I don't think there's any other data here apart from this. There's no other data here. So let's see. Okay, there's no other data which is like given. So the question ends with this part. Okay, the question ends with this part here. So this is the answer for our second part of the question. So we'll take this. So we also got the answer for these things. So that's about the question here. We could reduce the cost in many manners here, and we have shown all that manner available, all those manners in which it could be reduced. We have shown them. We have to get 12 points. I think overall we could have gone around some 12 points here. So we have one for long-standing customer, we have to use target costing. Transportation has to be improved, layout has to be improved, and final customer, we have to ask them, is app required, is packaging adding value, and what should be our target profit and cost, and can we move to a single supplier, and will it reduce the all these delivering, ordering, and admin cost, and can we improve the subcomponent quality, and can we encourage our employees to give fresh ideas. So this will give you the total number of points for this kind of a question. Okay, hope you guys got a good idea. We could now end like target costing here. So target costing is a simple concept only, but at the beginning it's a simple concept. When we keep on like expanding, okay, it becomes a little bit tricky kind of a concept. So thank you very much for watching this video. We'll meet in the next video.